Bruce, I'm looking at this coil here, Apex. I'm looking at this structure right here. This could be a trading range that we are in. We could easily just go down and then just be in this trading range and then continue up. And seasonally, remember how we kept saying like March, mid-March, end of March. Now you're talking about the end of the quarter. What is the process there? Why does rotation happens into the end of the beginning of the quarter?
Well, first of all, the end of the quarter is institutions are focused on trying to get their portfolios shipshape for reporting to their client base. And the reporting period typically is the calendar quarter and the end of the year. So we see here that the end of the first quarter was very strong. I always characterize the quarter. And so you could see that I would characterize the fourth quarter of 23 as an up quarter starting in October, very strong into the end of the year. And so and it went up and took out the highs from July, which was the end of the second quarter. And so the quarter was an up quarter, characterizing it simplistically. The first quarter was a very strong quarter. And so you have two strong quarters in a row, and you have institutions that want to be able to show their portfolios were well suited and were looked appropriate for the quarter that we just came out of, even though in fact the managers may not have done a good job. They will still adjust their portfolios to make them look better than they did and should. And everybody underperformed the Magnificent Seven type stocks. Maybe at the end of the quarter, that's changing somewhat. But you can see now that as we come into the end of the quarter, that there is rotation, and the rotation is moving away from these stocks into other areas of the market where there's demonstrable value. And so this is the rotation that you often get at the end of the quarter.